Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as of yesterday, the stock markets had a remarkable extending their record run for the second consecutive day. In fact, it was a mix of Reliance Industries, Telecom stocks, banks that led the gains from the front for the markets. And today, it's the F&O expiry for the month and for the June series of Nifty 50 contracts. And until the final day, we've also seen that the Nifty has already gained about 1400 points so far in this series and is just 130 points away from the landmark 24,000 milestone as well. The Nifty Bank is just about 12 points shy of about 53,000 mark as well. That also happened to be its a monthly expiry as of yesterday, and the index has almost recovered 7,000 points from its June lows of June 4th lows when the markets had crashed. But the question now remains, will the markets continue to sustain this momentum despite not getting the cues from global and the support from global cues or even the foreign investors, and will they have the inherent strength to continue moving on the domestic cues as well? Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen, and first things first, Sakshi, monsoon showers in Delhi, all of North India, and what a welcome relief from the incessant heat, humidity and extreme temperatures that we are facing in North India. Such a welcome relief, I can't even begin to express. We have a lovely terrace garden and all our plants had burnt out, Sakshi, over the last 2 months or so. So some relief, some respite, and let's hope this relief and respite from bears continues on Dalal Street as well. With that background in mind, ladies and gentlemen, let's start as always with our first chart of the day, which is the daily chart of the lovely index Nifty. Sakshi mentioned a very strong uptick that we've seen in the past 3 sessions. Let me just elaborate on that. From the low of Monday, Sakshi, which was 23,350, we are now at 23,868. A 510 point uptick, which is 2.2% on the Nifty. We are on the final pedestal of June's fabulous expiry, in which about 30 Nifty stocks are at record highs, Sakshi. I will just share the list with you. The other issues that are there in the market, just extreme optimism that we are faced with. So all that plus lots of expectations from the government, which has recently taken charge for the 3rd time at the center. So June was something that was phenomenal when it came to fulfilling those expectations, getting in a lot of money from overseas as also domestic equities, and of course the flow of block deals that continues unabated. So now at 23,868, what holds? What does the future hold for the Nifty, and what does the future hold for the Bank Nifty? Ladies and gentlemen, strength and strength alone. When you look at how markets are functioning on this monthly expiry, one thing is for certain: even if the index remains static for a while, which is both the Nifty and the Bank Nifty, please do not go short on the market. If you don't agree with how markets have moved up with such rapidity and with such fantastic pace, it's better to be fence sitter and then wait for the actual correction to start. But 23,950, 23,400 looks very achievable as far as the Nifty is concerned. Remember, it might be the last working day of the F&O expiry in futures and options, but June itself has one more day left as far as trading is concerned, which is tomorrow. So those cash markets will be clicking, and of course it being the end of the month, the end of the first quarter and the end of the first half of the calendar year, you will see a lot of NAV massaging happening. So tomorrow is most likely to be a more productive day than today, where a lot of F&O expiry trades will be panning out. As far as the broader consensus is concerned, it's only and only private banks and Reliance Industries which is making hay in the market. RIL at a record high, very strong delivery statistics. ICICI and Axis Bank at record highs. Maybe HDFC Bank will start clicking today as well. Yesterday was a rest day for HDFC Bank, and at the moment Sakshi, bears are at a complete back foot on Dalal Street. So the advice remains as it is. Buy the dip on the Nifty. If you get 23,800, 23,750, 23,700, these are very sharp reversal areas. If you look at the option chain, there is a very strong support on put writing at 23,800 for the Nifty. If you get that intraday, that's the trade to do. And of course 23,950 is visible in options chart as far as the Nifty is concerned, and then onwards to 24,000, which by the way Sakshi has been saying from the day the new government has taken root. With the banking sector, again Bank Nifty is very strong. It has a fantastic support at 52,500, and the resistance at the moment is 53,000. Let's see how it negotiates. Two blocks will happen today. Sakshi will give you the details, but CSB Bank, as a part of its commitment to the RBI to reduce promoter stake, 9.72% equity will change hands for a transaction worth 600 crores. Archean Chemicals, 10% equity will change hands. This is something that is to be looked forward to. Chemical space is showing entry of newer and better investors, and this will be at a 5% discount to yesterday's closing price. Sakshi, there is a very interesting data that has come up from the Spectrum auction. While the proceeds are muted, the competition for airwaves is fairly muted, but Vodafone Idea, which is now flush with funds from the FPO as also from some of its vendors, actually bid for about 3,510 crores rupees worth of spectrum, which is a very welcome surprise and a pleasant move. We'll keep an eye on this stock. It's above 18 rupees and at a multi-year high. Z Entertainment, the last day in F&O today. We'll be bidding goodbye to this media giant. And of course India Cements, July will be the last expiry for India Cements in the F&O space. We are going to bid India Cements goodbye from August onwards. Remember, it was the top gainer yesterday in F&O, up 14%. Sakshi, what are US markets telling us, and is there a bit of a disappointment in the FII number?
Yes, there is. Of course, Shail, overnight in the US, we did see the equity markets also end with just marginal gains. The Nasdaq advanced by about 0.5%. The S&P 500 and the Dow Jones added about up to 0.2% in trade. And there is a mixed trend in the index heavyweights. And again, tonight will be the focus on the weekly initial jobless claim numbers, which will get the direction for the markets in the US going forward for tomorrow. But even the futures are trading in a negative zone right now. So just a muted trend on that one. And Asia Pacific markets, they were largely in the red zone in the early morning trading session. Slightly cautious stance from the Wall Street, slipped into some negative sentiment within the entire Asia Pacific markets, especially the Nikkei, that's down by over 1%. And of course, Kospi, Hang Seng, Shanghai, down by about 0.5% to even 1.2% lower for the Hang Seng in the early morning trading session as well. Remember, there is some kind of caution right ahead of the US GDP data for January to March quarter that's scheduled for a release later on Thursday. So that's why we do see some kind of a muted trend. The GIFT Nifty is also indicating a negative start on the Indian markets at around 23,800 odd levels. So 50-point kind of a cut is what we could see in the beginning. And of course, overseas investors, they've actually turned net sellers on Wednesday after a day of buying. And foreign portfolio investors, they offloaded stocks worth about 3,535 odd crore rupees. It was the domestic institutional investors, however, that turned net buyers after 2 sessions of selling, and they mopped up equities worth about 5,103 odd crore rupees as well. So that's as far as the setup is concerned on the trading side. We'll also keep an eye out on the key stocks that we are watching out today. So Dr. Reddy's is going to be in focus. Its subsidiary, Dr. Reddy's Laboratories SA in Switzerland, has entered into an agreement to acquire Nicotinell and related brands from Helion company and its associate companies as well. We'll keep an eye out on this. Of course, telecom stocks, just like how Shail pointed out, we will keep an eye out on the entire space. So Bharti Airtel acquired 97 megahertz spectrum in the 900 megahertz, 1800, 2100 megahertz frequency bands. This is for 6,857 odd crore rupees. This is for a period of 20 years. Reliance Jio bought about 14.4 megahertz of spectrum worth 974 odd crores, and Vodafone Idea bagged about 30 megahertz of spectrum worth about 3,510 odd crores. JSW Energy, keeping an eye out on this one. Its unit JSW Neo Energy has signed a power purchase agreement through subsidiaries for 1325 megawatts of renewable energy projects likely to be commissioned in the next 21 to 24 odd months. We'll keep an eye here. KEC International is going to be in focus. The company has received new orders worth 1,025 crores for transmission and distribution of the cables and business as well. And Ramkey Infrastructure is going to be in focus. The company has received two contracts worth 107 crores and 23 crores from Power Grid Energy Services. We'll keep an eye here. Naveen Fluorine is going to be in focus. The company's board will be meeting on June 29 to discuss 750 crore rupees of a fundraise. SBI, on the other hand, on June 26th, the company really announced successful raising of 10,000 odd crore rupees through its fifth infrastructure bond issuance. So we'll keep an eye here. From the railways pack, RVNL is going to be focused again because the company's JV with KRDCL has received a letter of acceptance from Southern Railway for automatic signalling of Ernakulam Trivandrum division in Kerala. And from the power space again, SJVN is going to be in focus. SJVN's Green Energy has signed with an agreement with AM Green Ammonia India for cooperation on supply and sourcing of renewable energy for green ammonia plants. ITD Cementation, the company is going to be in focus because it's secured a 1,082 crore rupees marine contract. This is for construction in the third berth jetty at Dahej in Gujarat, along with specified additional works too. CSB Bank is going to be in focus. The company, as per some of the reports, FIH Mauritius Investments is going to be selling about a 9.7% stake via block deals, and they're aiming to raise about 595 odd crores. The floor price for this transaction is set at 352 rupees per share. Again, PI Industries, I'm keeping an eye out on this one. The company has announced an acquisition of plant health care company for about 32.8 million pounds. So these are some of the stocks that I'm keeping an eye out on, and Archean you've already spelled out, Shail.
Right. 8:46, ladies and gentlemen. We'll be also waiting for our guests to join us shortly. We'll have Devin Choksi, MD for DR Choksi Financial Services, joining us from 8:50 onwards. We have Rajesh Palvia, Head for Technical and Derivatives Research from Axis Securities, joining us from 9:10 a.m. And of course, Ms. Shubhani Shorkar, Senior Executive Vice President and Fund Manager, Head for Equity Research from Kotak Mahindra Asset Management Company, will grace the channel from 10 a.m. onwards. We'll look at a couple of stocks which have been buzzing in markets yesterday. Delivery volumes are very strong, and I'll request the PCR to fire Garden Reach Shipbuilders. Of course, needless to say, the counter closed at a record high yesterday, 2,087. 1.91 crore shares were traded, out of which 16 lakhs turned out to be into delivery. Remember, this has been a stock which has gone up rapidly. Sakshi, they held an AGM in Kolkata on 8th of March. In the last 3 months, the stock has appreciated 168%. Wow. 2087 in front of you. Please keep an eye out on this one. Delivery patterns are very, very strong. Over the last 5 days, the delivery average has been 14.32 lakh shares on a daily basis. On the 30-day average, this was 9.47 lakhs. A price rise accompanied by an actual increase in the amount of shares being taken out from the market points to probably better days ahead. Again, consult your financial advisors before taking a move. Remember, defense is super overheated. These are shipbuilders who are moving like rockets, Sakshi.
Absolutely. We'll also keep an eye out on what the brokerages have on their radar. So Jefferies is keeping an eye out on Polycab. They have a buy call and a target which has raised to 8,420 crores, for 8,420 rupees, pardon me. And this is as the company really sees further market share gains for the company in the cables and the wires segment to about 25 to 26%, up by about 2 to 3% on a year-on-year basis. Then Jefferies has also come out with a report on Bharti Hexacom. Remember, the stock was sharply sharply higher in trade yesterday, then it also saw very sharp profit booking at the higher levels as well. So they have downgraded the stock to hold. They have a target price of 1290. They believe the company has unexpectedly acquired spectrum worth about 1000 crores in the current auctions. The unexpected acquisition should help to augment its data services, and they also maintain a 17% revenue on a CAGR basis and EBIT of 23% on a CAGR basis going forward from here. Indigo is on the radar of Citi. They have a buy call and a target of 5100. They do believe that the demand environment remains healthy. Yields are also steady. Even though YOY and Q-on-Q trends are impacted by high base, they believe the management has continued to maintain a guidance of early double-digit year-on-year growth in FY25, and that should augur well. On Reliance Industries, the stock of yesterday, JP Morgan has come out with an overweight call and a target price that they have raised to 33.20 now. They believe expectations of a tariff increase have been supportive of telecom sector, and they're also building up into the forecasts now. There is an upside post upgrade in telecom expectations that will lead to higher valuations for even say Reliance Retail and improved top line in growth for Q1, and that will be Q as well. That will be key for them to watch out for. Macquarie has kept an eye out on HCL Technologies. They have an outperform rating here, a target price of 1800. They believe there is a significant medium-term margin lever available with the company. They also see utilization headroom that is highest among the peers and high-margin software product segment, which is already transitioned to subscriptions. So therefore, they see no downside risk to FY25 revenue guidance from here on. So these are some of the brokerage houses we are keeping an eye out on, Shail.
Absolutely. Ticking busy day for markets, ladies and gentlemen. The FNO expiry upon us for the month of June. Nifty alone is up 5.2%. The Bank Nifty rocking it at about 9.5%. Single month gains. Yes. Let's get a sensible view in the market from Devin Choksi, Managing Director, DR Choksi Financial Services. Good morning, Devin Bhai. Namaskar. A very warm welcome to you on Market Today. As always, it's such a pleasure and a learning exercise listening to your decades-old wisdom. Tell us, what is afoot on Dalal Street? How do you see this fantastic rally unfolding? And your favorite stock over decades, which is Reliance Industries, is now at a record high, finally emerging after 21 weeks.
Good morning, Shail, and thank you for having me on the show. Well, I think the market has actually speaking started taking the momentum cue for now the large cap companies. Up till now, the momentum was probably moving in the direction of mid cap and small caps, and where their valuations have reached to some crazy levels. Those who lagged behind are the large cap companies, and I think their valuations remain pretty attractive, starting from the heavyweights like HDFC Bank, where it was neglected for a longer period of time. And we have been continuously saying that uh, the banks like HDFC or banks like SBI, they are doubling in size as far as their AUM is concerned in every 4 years. I think as far as I think next 10 years journey is concerned. Given that kind of a growth rate, you cannot remain at a neglected valuation of around 2.0 to 2.5 times price to book value. I think that's where probably I think our conviction was high that the valuation is demanding to have a relook at this kind of companies. Given the strength of buying that we have experienced in some of these counters like HDFC Bank, it actually materialized into buying into some of the other heavyweight counters because most of the index funds who would like to do the rebalancing of their portfolio, they would immediately, I think, start putting in money, wherein I think the weight has to be increased. And that's where the turn came for Reliance. Frankly, if you ask me, I think between yesterday to today, there is nothing which has changed as far as the fundamental is concerned. Yes, of course, I think we all have been looking forward to an event wherein the renewable segment of business is announced as commercial activity somewhere in December this year. So I would think that I think the fundamentals remain as strong as they were before. Only the market momentum has now started catching up some of the large cap stocks who are having reflection onto the index. And that's where probably I think the indices are now started looking up. And that's where I think the portfolio balancing act has started catching up with some of the laggards up till now, which included some of the other banking stocks as well, along with I think the heavyweights like Reliance.
Very good morning to you, Devin sir. I want to
Good
also
morning.
ask you, around me, whenever I'm getting into conversations with average investors out there, they're getting into a sense of fear and always asking about when will this market correct? Is there going to be a big impending correction that we will not know and it will happen? Do you feel that with this run up, are we overheated in any sense? Is there a pocket of froth, or is this supported by enough and more fundamentals, macros, earnings that will continue to move up the markets despite higher valuations, sir?
So good morning, Sakshi. Well, I guess I think two things will have to be looked at. On the fundamental side, there is no questions asked. I think the fundamentals remains as strong, and I think probably getting more stronger with respect to companies and their earning outlook. Maybe the discounting, which used to be 1 year, 1.5 year, has now moved to I think 2.5 year, 3 years. So that's where probably I think I started buying stocks. I think in advance, 2.5, 3 years, and that's where the premium valuation is. If you start normalizing this particular aspect of premium valuation, then you are buying something expensive, but at the same time, I think with a growth connected to it. So if not today, I think tomorrow you are likely to earn out of it. That is one thing which is really seen, which was up till now, I think never seen as a visibility in past many years. So this time around, I think this particular situation is remaining clear that corporates are going to grow and I think grow in a sizable manner. So that is one positive thing. Having said that, I think there is always a caution. The caution is that I think there is no chance to make a mistake here. If you are showing a growth of 30, 40, 50% in your business, in your revenue, in your profits, and for some reason in 1 or 2 quarters or some cyclicality factors I think affect you, and if that growth tapers down to say 20, 30% kind of a growth, this market won't be very kind in accepting you with a premium valuation of such product. And so that's a risk factor that you carry along with. Otherwise, I think the other important aspect, which is the liquidity. According to me, the liquidity factor is remaining strong and will further remain strong, largely because of the fact that current liquidity of 21,000 crore SIP into mutual fund, or for that matter, 20% kind of a growth in the new business premium in insurance companies, and same with the provident fund kind of a portfolios. So all the public money, as we call them as, they are actually growing at a sizably good manner, and as a result of which liquidity will remain intact. So if liquidity remains intact, I think the market will not have major slippages. It may correct, it may go down, but I think there will be buyers again available, if not, I think across the board, stock specific basis. So we remain distinctly confident about the fundamentals. We remain distinctly confident about the liquidity factor. We are cautious about the valuations which are moving up in advance, and we are cautious about, I think, the companies not making mistake of not producing growth which the market expected. So these are a few points I think I can always put forward while selecting the investment theme at any given point.
Right. Sakshi, we'll just mark an important development that's just happened. There is a block deal of India Cements for 6 crore shares at 262 rupees that has just happened, which is about worth 1550 crores. And if you look at the total market cap of about 8,100 crores, this is 19% stake that has happened. And it seems that one of the largest investors in the company, Mr. R.K. Damani, has sold that stock to one of the largest cement players, not from the Adani stable. I'll get you more details, but India Cements was something that moved very sharply yesterday, up 14%, and there's a huge block that has happened. Devin bhai, series of consolidating moves happening in the mid-cap cement space. How do you see this transaction?
In fact, very, very happy, Shail, to see this kind of a consolidation happening. Whenever you are in a commodity business, I think the fragmented business environment does not help. Unless you are a player of a size, I think you cannot take actually the advantage of the move that you get in the commodity businesses. Cement is one such business, I think, which is extremely commoditized. At the same time, I think this particular business is transiting big time. Uh, Today, I think cement is being sold majorly in form of, I think, the retail play, And also, I think partly, I think by way of the mixture, then I think the grinders, which are probably, I think, helping them to an extent to supply to the projects. But my take is that I think the prefabricated blocks, which are required for construction, for a faster or a speedier manner in which the project is required to be executed, is one thing which is going to be demanding the cement companies invest something in the front end technologies. And that's where I believe that I think the larger players like Ultratech, larger players like Adani Group, or for that matter, even Shri Cement, they are the ones who are registering the claim that they would be investing significantly in the front end part of the business for developing the technology led expansion on the prefabricated blocks, etc. On the other side, Adanis are showing the distinct path wherein they are managing the supply chain logistics properly. They have the presence on East Coast and West Coast as far as their port is concerned. They do the inland transport of cement, I think, through the ships and all. As a result of it, they bring down transportation costs significantly. And they have the limestone mines, which is a key raw material for them, which allows them to probably expand the capacity also at the same time along with the green power focus, which they are now probably having significantly. All in all, put together, I think would make the cement business profitable and sustainable going forward. So we believe that consolidation is the right approach, and some of the larger numbers, I think larger companies with larger capacity, would be the right choice to have in the portfolio.
Okay. Pre-open is upon us. Let me start with the most important stock. India Cement opening 10% higher to 88.88. Let's see how it moves on from this level. But a major transaction that's happened on the cash market, 6 crore shares or roughly 19% equity changing hands between a promoter and of course one of the largest cement players. Z Entertainment, ladies and gentlemen, up 10%. 171. Today is the last day that Z will be with us in the F&O space. Please keep an eye out on these two counters, both of them mid caps, both of them very, very high beta counters. Nifty 50 for you, 87 points lower, 23,781. Let's keep an eye out on what's happening in the super index heavyweight space. HDFC Bank down 21 rupees, 1680. You have a green a red tick again on Reliance, 28 rupees lower, 3000. And what is Infosys doing? 12 rupees lower at 1520. Remember, today's the monthly expiry. The index is likely to be flat after rising 5.2% in all of June. A very, very quick look into the most active counters. Well, no surprise there at all. In the F&O, it's Z and India Cements. Huge amount of trades happening. India Cements is now stabilized 2.5% higher. No let up in Z. Still 10% higher. We'll very quickly take a detour into NSE 500. Whirlpool of India, very interesting, 20% higher. And I'll tell you why. Globally, German giant Bosch is likely to bid for Whirlpool in US, and this will have a local impact in India, where Bosch will have to float an open offer for Whirlpool shares in India. So 18% higher, 2184. All-time high on Whirlpool is 2900 rupees. What else is moving? CSB Bank 5% higher, 373. Coming back to Devan Bhai. Devan Bhai, series of large transactions happening in India. I am sure this is good news for retail investors who are into the market via mutual funds, because mutual funds will now bring added momentum into all these stocks which have been lying quietly for the last 3-4 years.
Yeah, I think importantly, when the retail investor himself cannot look into the individual stocks per se, the fund managers are the ones I think who bring the right kind of ideas into the portfolio, and that's where I think you are getting the advantage of the maturity of the fund manager to manage your investment. There is no doubt about it, and I guess I think this is where probably the some of the quality fund houses have actually focused on. They have actually been concentrating on buying some of the good quality stocks in the portfolio for the purpose of holding them for a longer tenure, And at the same time, I think whenever you see this actions are happening on the ground for consolidation, if they get the advantage out of it. There are many mid-sized, small-sized companies which you may probably today find in selective portfolios of some of the fund houses. You will find that I think those companies eventually, I think, starts getting into the fold of some of the larger companies. Because as we have always said, that next 10 years are the years in which the big is going to get bigger as far as the country is concerned. So some of the large companies today, they will become the global scale companies going forward in next 10 years. And that would happen through organic and inorganic growth both, because the market capitalization and the currency also helps them in putting this particular growth momentum forward. So we remain distinctly bullish about the quality of the business, where I think the fundamentals are strong, and where we believe that I think the promoter has got sufficient amount of resources to manage the growth even through inorganic way of I think build. So yes, I think the consolidation is the name of the game. Be selective. That's a mantra that we follow.
Okay, got that. Devin sir, what about the telecom space? How are you looking at the entire space? That's abuzz with action amidst the entire spectrum auction that has unfolded in front of us. All three players have bid: Reliance, Jio, Bharti, Airtel, Vodafone, Idea. And of course, we've seen unexpected coming of spectrum within the fold of Bharti Hexacom as well. There's been a series of action with deals happening in Indus Towers. How are you approaching the entire space now that the next trigger will be the tariff hikes?
Yeah, now I think the market wants I think the tariff hike to be taking the leadership as far as I think the revenue book expansion is concerned and the profit expansion is concerned. Uh, Not going to be I think immediately as far as I think I understand, because I think on one side, the Geo and the Bharti, both of them are systematically keeping the tariff low for the purpose of, I think, getting the Vodafone Idea's customers migrated into the portfolio. And on the other side, I think if they end up increasing the tariff to a greater extent in a very rapid manner, then probably I think they also give the third competitor the chance to possibly increase the tariff and become a revival case. So I think it's a typical competition which is on at this point of time. But all in all, put together, if I have to summarize in one line, probably I think you are seeing a 20% kind of a growth in the revenue and with the EBITDA of probably companies like Geo platforms. That's where you remain confident about that. On one side, economy is growing at a nominal rate of around 11.5, 12%. On the other side, the utility businesses like data and the telecommunication and the data. So to that extent, I think you are basically seeing the growth of around 20% or so. I believe that I think one should stay invested like how you stay invested in FMCG business, because this business has a natural tendency to provide larger growth. However, the differentiator would be the integrated growth platform that Jio has provided and Bharti has catch up with. I think Vodafone is yet to catch up on that particular aspect. So I think the Jio would probably remain the target beneficiary, because they have got the connectivity on ground with the fiber that they have laid down across 24 circles. And at the same time, the mobility connection that they have provided across I think, all the circles, which is giving them a distinct advantage of, I think, on-ground data as well as mobile data. Both of them are equally important for the computing business, which is under 5G at this point of time. So we remain bullish about possibilities in Geo at this point of time, because they produce significantly large amount of revenue and profit as well, which gives us confidence to stay in the portfolio.
Okay, ladies and gentlemen, let's just take a detour into the markets. Nifty's settled 12 points higher. Remember, it's the monthly expiry. There should be some kind of sanity and rest for this wonderful index. Let's take a detour into FNO and see what all is buzzing. Okay, Axis Bank 2% higher, 1310. It's a record high. HDFC Bank on the back foot. You see a third of a percent lower. ICICI Bank about a percent higher, and India Cement has settled 8.5% up at 285. We'll see how it goes. Indus Star is up 1.9. Idea Cellular is up 1.2, and Bharti Airtel is up a third of a percent. Sakshi, very interesting meme floating around the markets yesterday. Vodafone Idea is now an adult. It's now above 18 rupees. So these are the kind of things that happen in the markets. But all in all, it's likely to be a very strong move coming in. Sakshi reveals the name of the buyer for the transaction. I pointed out the block deal, and Sakshi will let you know the name. So, Sakshi, who's the lucky
Well,
guy?
Well, it's Ultratech Cement. They have come out with a statement that they are going to be buying 23% stake in India Cements. This will be at 267 rupees per share, and they are buying about 7 crore shares of India Cements with the transactions that we are already seeing. And they're likely to complete the stake purchase in India Cements in 1 month time. These are the statements that are coming in early on from Ultratech Cement, and there you have it, 11,270 on Ultratech Cement, over a percent uptick on this one, and it's the top mover on the Nifty as well. Let's get in Devin Bhai to talk about it. Devin sir, please tell us, Ultratech Cement going ahead with this consolidation. You already told our viewers that you're pleased about this consolidation which is underway. What do you have to say about this transaction, and how will the entire cement space now go forward with it? Because Adani's, Grasim, everyone is like heading on to get a larger pie of the market share within the cement pack now.
So I think probably at this point of time, as I see it, I think it's more of a strategic move from the Ultratech side. India Cement on one hand, I think, has always been having a larger potential, but they have never been able to, I think, materialize on that particular potential. And the operating parameters have remained weak in that company. So obviously, I think it does make sense that even in this cycle, a stronger player who has the ability to have the reach to the market and stronger player who have the ability at the pan-India level is taking control of a company or will take a control of a company which is having potential but not delivering up to the potential. So to a greater extent, I think this particular transaction should work well going forward for the investors of India Cement, because we believe that I think Ultratech's I think target to reach up to 150 to 200 million tons capacity going forward would probably materialize better if they go into the inorganic approach out here, which is what they are suggesting. At the same time, I think they're mindful of the next competitor, which is Adani. They are actually moving very fast with the inorganic growth target, and they already spelled out their intent to become a 200 million ton cement group. So from that perspective, I think to remain one up in the segment market segment, you require to have this kind of inorganic growth transactions opportunity taken into your account. I believe that it should be win-win for both the shareholders of India Cement as well as for Ultratech in general.
Right. Devin bhai, before we bid you goodbye, two mid-cap stocks and one small-cap stock where valuations are sensible and our viewers can take in a position for a year to 18 months.
I think it's a tough call, Shail, I think these days to give you something which is sensible valuation out here because everything is going up in hurry today. So it is slightly not very convincing, I think, to give very detailed answer. But we believe that I think if you are looking at the deep value investing approach, then probably I think companies like Praveg could possibly work well for your portfolio. Remember, this company is implementing some of the larger projects. They have already implemented 13 at 13 sites with 750 rooms. Now they are expanding it to 1,000 rooms by the end of this financial year. And thereafter, I think about 1,500 rooms going forward. Uh, However, I think the business is unfolding on a sequential basis. So, in a quarter to quarter basis, if you are going to compare this company, this cannot work. But if you are going to hold this company for next 2 years and above, this could be, I think, a good opportunity because the size of the revenue book is expected to become 450 to 500 crores, on which I think they are talking about 180 to 200 crores kind of EBITDA going forward. So this is one area where we believe that I think along with the spiritual travel or the tourism or the leisure travel and tourism is basically helping companies like Pravec to possibly take the next course of producing growth in the hospitality segment. Likewise, I think there are companies in auto ancillary space where we probably like them most. However, the valuations like they are scaled up to 55 and 65 Ps. So I'm refraining from putting any names at this point of time. Of course, for Pravek also, I think I would like to add a standard disclaimer that here the investment interest is there, and at the same time, I think we are personally as well as in the client's portfolio capacity having the positions in the stock.
Right, ladies and gentlemen, thank you so much, Devin Bhai. And in the same breath,
Okay.
we'll be welcoming Rajesh Palvia, who will be handling the technical and the derivative parts of the market. He's the head for technical and derivative research at Axis Securities. Rajesh, just 30 seconds. Two very quick calls. Where do you see the market? Where do you see two stocks outperforming the market?
So, Shailji, first one is Reliance Industry, and we believe that really can extend further, and 3100 to 3120 could be the next target for Reliance. So, Reliance is buy with stop loss of 2995. And the second stock that we like is Indus Tower. Here also we are having bullish view and upside target we are projecting towards 370. Keep your stop loss 348.
Okay, ladies and gentlemen, the markets are open, 30 points down on the Nifty. Remember, it's the monthly expiry, 23826. Bank Nifty starts with a 174 point back foot. IT index is down 165 points and the Nifty 500 is down 7 points. Very, very quickly, let's see what the big boys are doing. It's circuit on India Cement. Remember, it's an F&O stock. First 10 minutes, 10-15 minutes, it'll pause at 10%. 288.8, a very large block happened. Ultratech Cement has purchased 23% stake in India Cement. Let's look at the broader markets and see what's happening. Reliance is down 12 rupees, 3015. Infosys is down 3 rupees 55, 1537. HDFC Bank is down 9 rupees at 1692. Amongst the heavyweight stocks, Axis Bank is in the green, 0.5% higher, 1292. Lever is in the green marginally, ITC is flat. Okay, let's go to F&O directly and see which is the most active counter with gains. Okay, Idea is 1.4% higher, 1828. Ultratech Cement is smoking hot at 3% higher, 11486. Very quickly, I'll get into NSE 500 and then touch base with Rajesh Palvia. Okay, strong move coming into Indus Stars, 358.75, about a percent higher. Titagarh, 4.5% higher, 1841. Whirlpool, 13% higher, 2085. You have a strong move coming into KEC International, 6.5% higher. CSB Bank, 6% higher, 377. Remember, this is the deal boy. And of course, you have PI Industries, 2% higher, 3849. Z Entertainment, its last day in F&O today, 158, 1.45% higher. Coming to you, Rajeshji, what needs to be done?
I think it's still the way market is opened. I think this is just BTST kind of trades. Those who have already taken some profit booking is happening, but I think till we are holding about 23,800, 23,780 kind of zone, one should look to for buying opportunity in market as overall structure is bullish, and we believe that again rally may extend. Possible target for Nifty spot we can see towards 23,900 to 950 also during the day itself. So our stop loss to buy Nifty for Nifty spot is placed at 23,770. This is our stop loss to buy during the day. At this moment, we believe that some buying action is happening in banking space as well as in pharma space. So from banking space, Kotak Bank one can buy at this juncture. Kotak Bank, the way stock managed to view breakout above 1800 mark, I think that stock may exhibit a good amount of rally towards this expiry. And 1830, 1840 could be the next target for Kotak Bank. Here, our stop loss is placed at around 1790. And the second stock that we like is from pharma space, that is, Lupin. This stock is also, started recovering. I think this stock can also continue upward momentum towards 1630, 1640. Your stop loss should be placed at around 1580 to buy Lupin also. And the third stock that we like is from, oil and gas sector, that is GAIL. That stock is also again, inching higher. So we believe that, GAIL can also continue upward momentum. 20 to 222 could be the next target for GAIL. Your stop loss should be placed at around 213.
Okay, got that. But the entire cement space seems to be in the thickest of action that we are looking at. So beyond Ultratech, India Cements, we are also seeing the entire space up and about. So Orient Cement is up 8%, Udaipur Cement is up 5%, Sagar Cement is up 4%, Sri Digvijay Cement is up 4%, Burnpur Cement is up 13%. The entire space is abuzz with action with this new deal which is underway. Rajesh ji, good morning. And where in the cement space will you look for momentum play?
So I think most of the cement stocks are, now showing good traction post this announcement. I think one can again look to buy this JK Cement also. That stock is also looking promising. The way stock is now comfortably holding above 4,400 level, I think here also we can see a continuation of rally. Possible target 4,600 we can see in JK Cement. So here we are bullish, and keep your stop loss around 4,410. I think Grasim is also looking promising. Here also one can look to buy. The way stock is enjoying its almost all-time high trajectory, series of higher top, higher bottom formation is taking place. Grasim can also move further higher to 2640, 2650. One can look to buy this stock also with stop loss of 2560.
Got that. Well, the F&O space is also filled with all the cement names. So India Cements, Ultratech Cement is up and about within that space. Beyond this, it is Z Entertainment that Shell had highlighted. PI Industries, which was in news as well, 2.1% higher. GMR Airports Infra, Steel Authority. These are these stocks that are abuzz with action. Again, on the sectoral front, you do see media, metals, broader markets, consumer durables, realty, infrastructure play. Really looking positive, and even the PSU stocks are coming back. The index is up by about 0.4%. The steel space, the power space seems to be in the thick of action, and the oil and gas space particularly. So stocks like GAIL, Oil India, ONGC, they are back in action today. Where else are you looking for a good play today? Rajesh ji, anything that strikes your attention?
I think initial volatility post opening is there in market. I think another 5 minutes would require to settle down this initial volatility. But the theme where we are focusing at this moment, that is banking and financial, that theme is likely to continue furthermore upside. I think now one should focus on the PSU banking space also. Though there was some consolidation, private banks were performing, but I think PSU Bank from that space, I think one can look to buy SBI also. That stock is also looking promising, and here we can see some buying interest in next couple of days, and possible target for SBI could be the 860 to 870. So one can deploy some trade here on the long side with stop loss of 830. We have already discussed about Kotak Bank. I think that stock is also inching towards its day high. So here is also we have a bullish view on from this banking and financial space. ICICI Bank is also promising. I think Bajaj Finserv, that stock is also looking interesting from NBFC space. I think here there is a possibility that this stock can exhibit good amount of rally in near term. Possible target for Bajaj Finserv we can see towards 1645 to 1650. So here also we have bullish view with stop loss of 1595. So and IEX, that stock is also looking very interesting. The way stock has moved up during this series, I think here is a potential to continue furthermore upside. Possible really can extend in IEX towards 185 to 188. So we have bullish view for IEX also with stop loss of 177.
Okay, ladies and gentlemen, we are now at 9:23. The Nifty has very recently touched 23,825. So far, that is the low for the day. Remember, I had mentioned that 23,800 is a super strong support on Nifty options chain for July 4th, which is the next weekly expiry we are tracking. Let's dig a little deeper into the markets now that the initial enthusiasm seems to be over. Advanced decline is dramatically in favor of bulls. 1333 shares in the green, 745 in the red. Therefore, normally 2:1. We track 19 indices for you. About 12 of them are in the green. As far as indices are concerned, there isn't much in terms of percentage rally except for Nifty Metals Index, which is about 0.6% higher after a series of downticks. That is how the markets are functioning for the moment. We have a strong high coming into stocks like Policy Bazaar, Whirlpool as well as Bosch. Both of them are at intraday highs. Rajeshji, coming to you on Whirlpool, this is a global news which has come in via agency Reuters, where Bosch, the German parent, is likely to make a bid for Whirlpool in the US. This will trigger an open offer in India. Both Bosch and Whirlpool are also listed in India. What is Whirlpool's chart telling you? 12% higher.
So, gap up opening in the stock, reaction to the news on the positive side. Looking at the short to medium term structure, stock now managed to give breakout of its August 2022 swing high. So that's a long term chart breakout is taking place. Though stock was in downtrend, but the way stock now managed to give breakout on the monthly chart as well as on the weekly chart, the trend is likely to change, and I think some more follow-up buying action we can see in a short period of time for Whirlpool. Uh, Till stock is holding about 2000 level, our view is on the bullish side for the stock. I think there is already gap up opening of around 11 to 10%. If some cool off effect comes in the stock, and if you get opportunity to buy this stock again around 2040, 2030 kind of level, that's the again a level to enter in this stock. Your stop loss should be placed at 2000 level. And on the higher side, once stock again, crosses about 2100, this rally can extend to 2200 to 2240 also. So I think one can hold position in Whirlpool. Those who are lucky to buy this stock at lower level, fresh buying can be done at 2040, 2030 kind of zone. That's the attractive level again. Bosch continuously moving in upward trajectory, only series of higher top, higher bottom formation. Stock is in strong uptrend across all time frame. I think here also we can see a really to continue. 35,000 could be the next target for the stock. So those who have already bought the stock or wanted to buy the stock can buy this stock at this level also. Even in decline, you can add towards 34,100 kind of zone also. Your stop loss should be placed at around 33,900 to hold Bosch also for upside target of 35,000.
Fair point. And the all-time high on Whirlpool, ladies and gentlemen, is 2757. This was seen way back in 2021. And Sakshi, what happened after that was that Whirlpool was brought into the FNO space. And that more or less killed the price action in the stock. It went to as low as 1200, and then there was this parent transaction that happened. I think 16-17% Whirlpool of US sold to domestic investors at about 1250 rupees, and from then there is absolutely no looking back. That transaction happened somewhere like 21st of February, and from then on to now the counters appreciated about 75%. What's on your plate, Sakshi?
Well, it's cement all the way, and of course, apart from this, some of the PSU stocks are also doing well. Power Space and Power Finances are coming back in action. REC PFC back up in trade today, about 2.5% higher for REC and about 1.5% up for PFC as well. Where do you spot opportunities within the Power Space? Are these stocks looking positive, or anything else that you could point out, Rajesh ji?
So there is a continuity of uptrend in PFC REC. Some brief correction was there in last couple of week, but still, if we analyze the long-term structure, both stocks are very well placed in upward trajectory for short to medium term as well as for the long term. So PFC REC, yes, one can here also one can buy. Uh, though already corrective move is already done in the stock, I think. There would be again resumption of uptrend in both the stock as structure is still looking attractive on the near term short term time frame. So for PFC we have a bullish view with stop loss of 480, upside target once the stock manages to cross over 495 zone, then this really can extend to 520 kind of zone also for PFC. Again in the power space, I think as I've already mentioned, IEX, that is again proxy play to power, that where we have a bullish view for the IEX, and we are expecting that this stock can also continue upward momentum. I think one can look to buy here Suzlon as well as the NTPC. These two stocks from that space is also looking very promising. Suzlon, the way stock managed to give breakout over 50 level, I think there is a possibility that this really can extend further, and positional target for Suzlon we can see in short term towards 58 to 60 kind of level. So here also we have bullish view with stop loss of 50. NTPC buy and accumulate would be the strategy. Overall structure is bullish. 362 should be your stop loss. On the higher side, once stock crosses about 375, one can add more position. Then possible target we can see towards 390 also.
Okay, got that. What about the metals pack? Is that looking positive to you at all, Rajesh ji? Some of the stocks are buzzing. So stocks like JSW Steel, Hindalco, for instance, they are buzzing in trade. Even Tata Steel, Jindal Steel, NMDC, the entire space is coming back in momentum.
So some profit taking we have witnessed in metal space, but overall structure for metal stocks are still on the bullish side. I think JSW still one can look to buy at this juncture. The way stock has shown buying interest after this opening, I think there is a possibility that stock may attempt to give breakout above 940. That's the congestion zone for the stock on the near term structure. So if that breakout happens above 940, then possible really can extend to 955, 960 during the day itself or in next one or two trading session. So JSW is still is on our radar. Your stop loss should be placed at around 920 to buy this stock. Above 940, one can add more position for target of 960. Even on the metal space, I think NMDC is another stock where one can focus at this moment. Though stock has corrected during the week, and stock has shown some sort of profit taking, but the way stock is holding the ground on the long term chart, and stock is now trading near to its important support area on the weekly chart. So we are holding bullish view for NMDC at this level. Your stop loss for buying this stock is placed at 246, and once stock crosses about 256, then rally can extend to 265 to 270 also.
Right. Sakshi, I think it's the empire that's striking back and with a huge, huge vengeance. Let's look at the PSU sector. It's abuzz with gains, whether it is rail, whether it is government financing companies, all of them are now in the green. We'll start with the most usual suspect, IREDA. It's just broken past 200. Remember, the all-time high is 215. This needs to be noted, 4.5% higher. Then the two power financing stocks that you just marked, REC and PFC, up 3 and 2.3% respectively. Erstwhile favorite HUDCO is back in action, 292.80. This is the price, 2% higher. And of course, from the railway pack, RVNL 1.7% higher, 416. IRFC 1.2% higher, 177. IRCON 1.2% higher, 273.80. These are the stocks that have come in very, very sharply into focus. Remember, the first 15 minutes have lapsed, and the rally seems to be building up on IRCON. 275.25, 1.8% higher. Rajesh ji, what are the charts of IRCON telling you?
So, Shalji, stock is still in consolidation on daily chart. Stock is holding the ground above 20-day moving average, so that clearly shows that strength is still there in the stock prices. But I think the congestion zone, the major breakout level for near-term structure is placed at around 280 zone. So 280 is the immediate supply zone. So till that, some pullback action would be there. But the major rally will takes place about 280 zone. So if it crosses 280, then rally can extend to 300 also. So at this moment, buy and accumulate would be the strategy. Your stop loss for buying this stock for positional perspective should be placed at around 266.
Fair point. And what's moving now is Reliance, Sakshi, 3045, fresh record high coming in. And this comes at a wonderful time for the Nifty as well. It's just tested 23,800 on the cash markets. And from now on, let us see how it moves. What also is moving in the green is ITI. This is the telecom company run by the government of India as far as equipment is concerned. 181 for you, 1.2% higher. What's on your plate?
You see some momentum coming back on the auto ancillary pack. That has also been a buzz with action of late too. So Gabriel India is up by 4.5%, Setco Automotive is up 5%, Precall is up 5%. Shivam Autotech is up 4%, PPAP Automotives is up 3%. Let's also look at stocks which we have been continuously looking at. So Samvardhan Motherson, CIE Automotives, JBM Auto, Electra Green Tech. Let's look at whether the momentum has spread across to those spaces as well. And we'll ask, so Samvardhan is flattish, but the other rung companies are now taking into action. Igrashi Motors, Minda Corp, they are all moving in trade. Rajesh ji, do you like this space? Anything that looks positive to you?
So definitely, auto ancillary is the sector where continuous upward momentum is taking place, and I think here we can see continuation of this up move as most of the auto ancillary stocks are doing good, and most of the stocks are already trading about their breakout levels on the long term as well as on the short term charts. So yes, so one can look to buy some of the tire space, some of the battery space. I think here there is a potential for further more rally to extend. From tire space, Apollo Tire is looking very promising to us, though some cool-off action has been done in last two trading session. But looking at the overall structure for Apollo Tire, we believe that this decline should be used as a buying opportunity. Again, stock is available near to its important support area 510. So one can buy and accumulate this stock with stop loss of 502. And again, once stock manages to cross above 520 kind of level, then possible rally we can see towards 540 to 560 also in Apollo Tire. Again, Exide Industry is also looking very promising. I think the way most of the battery stocks have done well in last couple of days, Exide Industry is now again consolidating since last 2-3 trading session. The way stock is holding the ground at long term chart, we believe that here we can see again resumption of uptrend. uh, Buy this stock with stop loss of 555. On the higher side, we are projecting target towards 610 for Exide Industry also.
Okay, got that. We'll also get you to talk about some other stocks within the textile space now, Rajeshji, something that I've been tracking. And of course, there is some momentum coming back. Some reports from Textile Ministry also indicating that the PLI scheme will be extended. And most of the mid and the small cap names are actually sharply higher over the last few days. Raymond, of course, has been leading it, but stocks like, which we hardly touch, Indian Terrain, Nandini Creation, even Shiva Mills, for instance. These are the smallest stocks that we don't talk about, but all of them are in single high digits in trade today. Zodiac Clothing, something like that. All of those stocks, Sai Silks. How are you looking at some such textile apparel names? Anything that looks positive within this space?
So I think most of the stocks are in mid cap, small cap category for
Yes.
textile, and we are going to witness these kind of momentum towards the budget, because a lot of quotes would be there from the ministers or from the ministry, and a lot of expectation towards the budget for different sectors and from the industry players. So I think these kind of buying interest towards the some expect positive expectation on the budget is likely to be there. But still, if we analyze on the longer term structure, still structures are weak for most of the stock. Though yes, we are holding bullish view on Raymond. That stock is very strong across all time frame. So I think. If anybody wants to chase or some play on this kind of news flow, or some towards the budget, I think Raymond would be the stock where we are focusing to buy from this space. And we believe that till stock is holding about 2900 level, I think trend is likely to remain on the bullish side for near term to short term also. And we can see really to extend towards 3100 to 3200 also.
Fair point. A sharp reversal coming into the Nifty, a strong bounce from 23,810. Let's look at stocks that are contributing to Nifty's upward momentum over the last 3 or 4 minutes. Remember, today is the end of June expiry. Ultratech Cement. Sakshi, when was it that Ultratech Cement contributed 20 points to Nifty's upward move? Well, it's today. Reliance contributing 14, Grasim and Dr. Reddy contributing 6 and 4 respectively, and of course Kotak contributing 3 points. What's pulling the Nifty down? Profit booking in M&M, L&T, and of course ICICI Bank and HDFC Bank. Nothing to be worried about, ladies and gentlemen. These are pure F&O related moves, but the broader markets, I see so many of the indices now trading at days high. Let me just point them out to you. You have the Nifty Infra Index, days high 14,416, 0.5% high. The Nifty CPSE Index, 0.5% higher, 10,593. Healthcare Index buzzing because of Dr. Reddy's, 0.5% higher, 12,447. A host of broader indices, the Nifty 500, 22,483, days high. The Nifty 100 index and the Nifty 200 index, all of them now buzzing in the green, and it's the advanced decline which is now more in favor of the bulls. At the moment, about 1400 shares in the green compared with 870 in the red. Taking it away is the cement pack, the biggest high beta counter in cement, Ambuja Cement, now moving 670 rupees, up about 1.9%. There is a further move in India Cement as well. The counter is now up at 290.73. The intraday high was somewhere like 296. Record highs, let's take a look at them as far as markets are concerned. These are interesting names to look at. KEC, 915, 6% higher. Remember, this was a stock suggested at about 715 rupees by Gaurang Shah about a month ago. Titagarh, no surprise there, 3.9% higher, 1834. Bosch, 34, 247, a third of a percent higher. And of course, the usual suspects, Axis and ICICI Bank. Sakshi, one more stock has come back into focus from the PSU basket, which is NLC India, 3% higher, 249. Rajeshji, what are the charts of NLC India telling you? Fairly strong volume as far as prices are concerned, and the stock has moved after several weeks of consolidating. So far, 35 lakh shares have been traded.
So overall structure is bullish. Stock is in consolidation since last 4 5 months. Now stock is approaching towards the higher band of this consolidation. There is a high possibility that sector tailwind is working. So I think there is a high possibility that stock may attempt to view breakout about 254. If that breakout happens, then rally can extend to 270, 275 also in short period of time. So I think those who have already bought or want to buy can buy this stock at this level also. Buy and accumulate should be your strategy. Your stop loss should be placed at 242. Possible really can extend to 270, 275 in positional perspective.
Okay, got that. So that's the overview on such stocks. One stock which is down today after rallying for the last few days is Amara Raja Batteries. It's down by almost 4 odd percent. Even though Exide is still flat with a positive bias, I wanted to discuss Amara Raja at about 1679 odd levels. What would you say, Rajesh ji, on 1619 odd levels? What would you say, Rajesh ji, on Amara Raja Energy after that stock has really rallied in the recent past? And should one be really using this dip to get into the stock, all of those who have missed the best part of the rally, or is the top already done and dusted?
So very strong rally in the stock. I think if stock comes around 1570, 1560 zone, that would be again, important level or, near-term support area for the stock. So where again, one can, look to buy this stock. So another 2-3% dip would be used as a buying opportunity in the stock, as overall structure for the stock is on the bullish side. Auto ancillary is doing good. And I think this stock, after some brief consolidation, again may resume to upward momentum and then really can extend further also. So use this dip as a buying opportunity. So attractive level in this decline would be 1570, 1560 zone.
Got that. How about the railway space, Rajesh ji? Titagarh Rail is again buzzing with action. Some of the stocks other than Titagarh also mentioned by Shell like IRFC, they were rallying in trade. How about the entire space? Do you think these interim dips are looking interesting for some of the stocks which have not rallied that much and still have a scope?
Yeah, definitely. So overall, railway space is on the bullish side. Railway infra spending is likely to be there in the budget, and I think a lot of announcement we have already seen in towards this railway infrastructure spending. Titagarh Wagon, yes, definitely. One can use any decline to buy this stock as long-term structure is bullish until the stock not breaks below 1650 zone on the downside. I think trend is likely to remain on the bullish side and possible really can extend beyond 2000 level also. RVNL is also looking promising after a really now stock is consolidating since last couple of week. The way stock is holding the ground at higher level, we expect that once the stock crosses above 425 zone, then this stock has also potential to move towards a 460, 480 kind of zone. So I think RVNL is also another stock from railway theme can be buy with stop loss of 405.
Okay. Got that. So that's as far as the railway space is concerned. One counter that is buzzing within the F&O space is now Manappuram Finance. 5% higher within the F&O band. Rajesh ji, could you look at this stock? This has been a buzz with action since yesterday. How are you looking at this space? I think it was also in news, and I will just share the news again with all the viewers. But in the meanwhile, if you could look at the charts.
So, strong buying action is taking place in most of the banking financial space. Manappuram is one of those stocks. Stock now managed to give breakout of its previous swing high. The way stock has moved up in last 3-4 week series of high-low formation on a weekly chart. So that clearly shows that a sustained buying action is taking place in this stock. The way stock has moved up in last couple of trading session, I think if it's sustained about 200 level, then possible really can extend to 225 to 230 also for Manappuram. So I think yes, one can hold the long position. Stop loss should be placed at 202.
Okay. Right. Your Shell.
Let's look at the broader markets, ladies and gentlemen. We are at 9:48. The first half an hour of trade has lapsed, and we've seen a sharp spike in the Nifty from a low of about 23,805 to about 23,880. Remember, market and the Nifty will be really volatile today because of the weekly expiry, plus the fact that it's already risen very dramatically, but there's absolutely no let up as far as markets are concerned. Your first comment, Rajeshji, when you came in was Reliance. This was something that you mentioned before markets opened. Fresh record high coming in, 3060 for you. What do you think the medium term charts hold for Reliance? What do you think is driving this counter?
So I think definitely the telecom spectrum allocation that was happened yesterday, and I think that is the trigger for the stock at this moment. And we have seen a breakout of long consolidation of weekly chart. So this is the large cap stock, and I think the way stock managed to give breakout of almost 12 to 13 week consolidation breakout. So I think this really can extend, and we are holding bullish view. 3130 is the immediate target we are projecting for the Reliance. So I think those who wants to play this upward momentum on a positional perspective, they can look to buy call option also for July series. So I think one can focus on the call option of 3080 for July series, which is trading almost around 83, 84 rupees. So here we are projecting target of 125 to 130 for this call option. Keep your stop loss at around 60 rupees to buy this call option to play upward momentum of Reliance. And I think as we recommended this stock in the beginning of show itself, now stop loss should be placed and trail above your buying price. Our target for intraday perspective is around 3080 to 3100. So I think Reliance is now the driver to hold the Nifty at a higher level, and possibly I think as we are projecting target of Reliance beyond 3100, so then Nifty can also scale to the next level of 24,000 also in the continuation or in the support with Reliance, Ultratech, as well as this HDFC, Kotak Bank. These all drivers may take Nifty beyond 24,000 level very soon in the new series of July.
Absolutely. As I was mentioning to Sakshi in our opening commentary, ladies and gentlemen, that more than 50% of Nifty, which is between 25 to 31 stocks on the Nifty, are actually at record highs during the month of June. And you've seen blowout rallies in Shriram Housing Finance, in stocks such as M&M, in stocks such as HDFC Bank. And these are all super index heavyweights. For instance, HDFC Bank has rallied 13%. That's the reason why you see Bank Nifty at 53,000 and of course Nifty beyond 23,800. In fact, I think the early morning correction is over. You've seen a high of about 23,888, actually 23,891, and a low of 23,805, and from then on the market on the Nifty has reversed. A very sharp move coming in on Textile. This is again the same sector as Titagarh Wagons and Jupiter Wagons. Both Tita and Jupiter have appreciated 3x in the last 1 year. Texrail has just appreciated 1.7x. Rajeshji, what are the charts of Texrail telling you?
So I think again strong counter on this space, and the way stock now managed to give breakout of almost 7-8 days consolidation range. So I think this really may extend, and 240 could be the next target for the stock in the continuation of this up move. Stock managed to give breakout of last week doji candle, and now stock is comfortably holding about the previous week high. So I think your stop loss should be now placed at 221, possible target 235 to 240 in the continuation of this up move.
Fair point. And Sakshi, a sector that's come back into focus is the capital goods space. We track about 45 shares here. The usual suspects: Shakti Pump up 4% at 3478. PG Electroplast 4% higher, 3512. SKF India, the bearing maker, 2% higher, 6708. HBL Power, Polycab, Kirloskar Engineering, all of them buzzing with gains. ABB 8437. This is also buzzing with gains. It's just about to start 0.5% higher at 8415. What are you watching?
Similar stocks, and Uno Minda is also up by 3.6%. Devin sir was here with us, but we did not ask him about this. There was so much more to discuss with him, but he was one of the first ones to talk about Uno Minda as a stock which holds value, and the stock from then on has actually nearly doubled from the time he mentioned. So those are some of the stocks that are buzzing. Apart from this, Endurance Technologies is up and about. You also have Concor that's up about 1% now. Great Eastern Shipping is now buzzing in trade. GRSE is up by about 2% yet another time. Anything within the shipping basket that you like after such a rally has unfolded? Are you staying on the sidelines waiting for dips, or are you riding on the momentum, Rajesh ji?
So the way market is behaving at this moment, waiting for dip is not the right strategy because market is not giving any kind of dip to you. So you will keep on waiting and market will keep on moving on the higher side. So if you want to trade in market, then you have to chase some good quality stocks, and then you have to keep some of your investment amount to deploy if you get any dip to average out. So that could be the strategy to play in this kind of market, because everybody is waiting for some significant dip and which is not happening in the market at all. And we have seen the rally from 22,000 to all the way now. It's almost near to 24,000. There is no correction, only 1 day correction that was happened on election day verdict. That's the only correction which we have seen in the market, and that was very sharp. Nobody was able to, bought or able to buy those dip, because everybody was
Correct.
just calculating what could be the possibility of government now. So that was the only dip. I think yes, most of the stocks from this shipping basket is still holding the ground at higher level. GRSC continuously moving up, very minor dip, and then again resumption of trend. The way stock is holding the ground, I think 2400 would be the next target. If you uh, get any opportunity around 2100, even 22070 kind of zone, that's the attractive level to re-enter in the stock. 2020 is the stop loss to buy any dip in the stock. Even Mazgar Dock, that stock is also looking very promising. Yes, some profit taking has done in the stock at higher level, but still, till stock is holding about 3950 level, our view is likely to remain on the bullish side only, as long-term structure is bullish. So 3950 should be your stop loss to buy minor dips. On the higher side, if again stock crosses 4250, this rally can extend to 4600 also.
Okay, got that. The other space that seems to be buzzing is the healthcare space. I can see stocks like Max Healthcare, for instance, up 5.5% in trade today. Fortis Healthcare is up by about 2 odd percent. Add to it some of the pharma names like Dr. Reddy's, maybe even diagnostic chains like Dr. Lal Path Lab. Gland Pharma is up and about. These are some of the stocks that are buzzing within the pharma pack as well. What looks positive to you, sir? If one has to track the pharma and the healthcare space, any particular stock that catches your attention?
I think Lalpath Lab can be looked at this juncture. Though some recovery is taking place in most of the stocks like Metropol, Police is also moving in upsloping channel on weekly chart, but it's a slow mover at this moment. But Lalpath Lab, the way stock is holding ground and now trading about a 20-day moving average, so I think there is a high possibility that Lalpath Lab can show some outperformance in this space, and possible target we can see toward 2850, 2880 kind of zone in a positional perspective. So Lalpath Lab, yes, one can buy. 2730 would be your stop loss.
Fair point. Rajeshji, before we let you go for the day, I know you will not comment on Axis Bank. I wish you would. But your view on ICICI Bank?
So, in my opening commentary, also I mentioned that banking, financial both are looking very promising, and I think there would be continuation of furthermore follow up buying action in most of the banking, especially this time private banks are doing good. So the way HDFC Bank, ICICI Bank, Kotak Bank all have moved up, I think there is still room for another rally to continue in this private banks. ICICI Bank, our target for the stock on a short-term perspective is 1260 to 1280. Your stop loss should be placed at around 1195 to hold, ICICI Bank. I think some of the housing finance companies are also looking promising at this moment. Canfin Home, LIC Housing Finance. So I think whole buying interest is now again moved back to the banking and financial. The way Bank Nifty has moved beyond 53,000 now. I think here we can see another rally, and I think from that banking and financial, HDFC is the large cap stock, and here we can see furthermore round of rally to continue. And HDFC Bank, we are also holding bullish view, and we believe that this rally can extend to 1740 to 1760 for HDFC Bank also. Keep stop loss of 1670.
Right, ladies and gentlemen. Rajeshi, thank you so much for this lovely chat that we've had. And before we let Sakshi go, 23,919, a record high on the Nifty. This huge candle over the last 5 minutes is worth at least 40 points. A low of 23,850 to 23,913, and we are much above 53,000 in Nifty Bank. What a day it's panned out to be, and what a smart rally this has morphed into. Sakshi, before we let you go, what are you watching?
Reliance Industries contributing 22 points on this nifty move. It's back in action. So it's the big boy Reliance Industries that we've been discussing, Ignosium, and all our guests as well. Bullish on the stock. Since yesterday we were discussing, it was Raghavendra first who said that Reliance is all set to be the stock of the next series. We had brokerage houses reports today. Then we also had Devensa and both Rajesh ji talk about Reliance Industries. No let up, 1% higher, 3,059 on Reliance Industries right now. Apart from this, it's Ultratech Cement, HDFC Bank, Kotak Mahindra Bank, Grasim and ICICI as the top performers and contributors as far as the Nifty move is concerned, Shail.
Right, Sakshi. With that, what we'll do is we'll pause this per minute commentary on the market and get into what is a slightly longer term view. We are shortly being joined by Miss Shibani Sharkar. She's the Senior Executive Vice President and Fund Manager at Kotak Mahindra Asset Management Company, and also the Head of Equity Research. Shibani manages 5 funds at Kotak Mahindra Asset Management Company, and she'll be with us fairly shortly. The funds that Ms. Sarkar manages are Kotak Equity Contra Fund, Focused Equity Fund worth about 3,300 crores as far as assets and management are concerned, the Kotak Healthcare Fund, the Tech Fund, and of course the Banking and Financial Services Fund. Ma'am, a very warm welcome to you. Good morning, and what a wonderful time to have you on Market Today when there is a crisis of plenty. What to buy, what not to buy, and of course what to continue holding. Very warm welcome to you, ma'am.
Hi, good morning. Always a pleasure to be here with you on your show.
Okay, now let's dig a little deeper in the market, ma'am. In this, this hyper market that we are with us, we need some sensible advice coming in from people who look at valuations, who look at perspectives, and more importantly, who look at earnings. And no better person than you to talk about the markets. Collectively, you manage about 7,600 crore rupees over 5 funds at Kotak. We'll be discussing 2 of them in detail. But just the broad view, is the market overheated? every day Nifty rises by about 100 points and the Bank Nifty by 700 points. What are you thinking?
So yeah, it's a very interesting time to be in the market. But if you just take a step back and think about the key factors that have been driving markets maybe over the last few years, there have been three key factors. Number one is overall macro stability of India, especially in context of what's happening in the other emerging market peers. The second factor has been corporate earnings, and we've seen a sharp revival in corporate profit as a percentage of GDP back to almost all-time high levels. And the third has been flows, specifically the domestic flows. Now, all these three factors remain fairly intact at this point in time. India's growth, current account deficit, inflation all remain well under control. So macro stability continues. Corporate profitability is still holding on. So if you look at FY24, the delivery on Nifty EPS was higher than expectations. And the pace of downgrades has been virtually non-existent. One may argue that at the broader markets, we are seeing some earnings slow down, but overall earnings has been holding up fairly well. And the third factor is flows, where domestic flows continue to be strong. Now, in that context, as you rightly said, we need to look at valuations and be mindful of pockets where, sectors or stocks are trading at multiples which look to be stretched. So let's divide the market into three parts. Of course, a lot of debate between large, mid, and small. But if you look at just the Nifty in terms of valuations, Nifty is trading at about 4 to 5% premium to its long-term historic average multiples. Now, in that context, with earnings growth being significantly higher than what we have seen, these valuations don't look extremely stretched. And therefore, we believe that the risk reward where large caps and Nifty is concerned seem to be fairly okay and fairly well placed at this point in time. Now, when it comes to mid and small caps, of course, valuations are stretched both with respect to large caps as well as with respect to their own historic average multiples. What we believe is in this pocket of mid and small cap where growth remains strong, one should avoid companies and sectors where valuations look extremely stretched or where stocks have moved up on the back of low float and where fundamentals are not supportive. So overall risk reward continues to be somewhat biased towards large cap in this market.
Fair point, and perhaps that's the reason why the two biggest, heaviest weights in the market over the last 1 week or so have shown signs that many were waiting for months, if not years together. I'm talking about HDFC Bank and Reliance Industries, both of them moving fairly rapidly over the last 1 week. Shibani, if you drill down into mid caps and small caps, this is where the action is, and this is where large chunks of retail SIP money is coming month into month and driving up valuations, driving up prices, reducing floating stock, and inculcating this fear of FOMO, fear of missing out. As a fund manager, you wear one hat to deploy money, and as the head of equity research, you wear another to be sensible and not lose focus. How are you sort of battling these two devils in your mind, and where do you think does sanity lie?
So, interesting question. Obviously, when you look at mid and small caps, it's a wide universe of stocks across sectors. So, the way we have looked at portfolio construct is look at segments and companies where there is visibility of earnings growth over the next couple of years. And of course, valuations are reasonable. So, in that context, the way we have been positioned in our portfolio is number one, domestic facing companies continue to exhibit earnings growth, which is faster than companies which have global linkages. And therefore, domestic cyclicals, which include manufacturing, industrials, and infrastructure, where we have had an overweight position across our portfolios for a long time, that continues to be there. What we believe is that the capex cycle, which has so far been driven by public capex, specifically center, and then state capex picking up, will slowly translate into private sector capex, given capacity utilization levels in the sector and overall, if you look at the industry and markets. And therefore, growth should continue. Of course, here too, there are pockets of overvaluation where we would be cautious. But in the overall space, there are opportunities which still look constructive given the earnings profile. The second segment, which you alluded to, where we have been positive and where incrementally we believe that valuations and profitability earnings are in favor, is the banking space. And within that, specifically the private sector banks, where over the last few years, we've seen improvement in terms of return ratio profile, growth being fairly stable, and asset quality being under control. But valuations are significantly below long-term average multiples. So that's the second space where we have been positive on and where we have looked at incremental focus. Apart from that, sectors such as auto ancillary, cement, these have been some other spaces where we have been positive and where we have been overweight across our portfolios. So the portfolio construct has been clearly towards domestic facing sectors, and that continues in the current context.
Fair point. Shivani, shortly we'll be discussing the two major funds that you handle. Kotak India Equity Contra Fund with 3,100 crores under AUM, and of course the focused equity at 3,300 crores. You also manage the Banking and Financial Services Fund at Kotak MMC. I have a broader question to you on the swing towards private sector banks that we are seeing in the market. Does it mean that this is at the cost of the public sector banks, which have been market darlings over the last 30 odd months? People have made enormous money there. As an equity analyst and as a fund manager, do you feel it in your gut that the cycle is now turning and that we may have a flat to downward move in the PSU banking space?
So in the PSU banking space, again, let's just take a step back and look at what's happened over the last few years. One is that this sector was trading at multiples which were extremely cheap in the relative context. Secondly, from a sector perspective, there were cyclical tailwinds with credit growth improving, asset quality cycle turning, and that has also benefited public sector banks. And third, specific to the PSU banks themselves, we've seen improvement in efficiency, a lot more focus in terms of driving profitable growth. And all of that meant that ROAs for the entire space as a whole for the public sector banks have improved. Now you've come to a situation where ROAs for most of the public sector banks are typically close to about 1%. And from here on, the levers of sharp ROA improvement appear to be absent. Now, in this context, when you look at the entire PSU space, banking space, what we believe is that the larger public sector banks, which have liquidity on their balance sheet, which have a better deposit franchise, and therefore their ability to manage margins better and see improvement in ROAs are better placed than some of the smaller banks, which would possibly be somewhat inferior on the deposit side. And in that context, today, when you look at the private sector banks, on the other hand, private sector banks have clearly underperformed the sector as well as markets. But their overall profitability, growth, as well as ROE expansion has been intact. The private banks, especially some of the larger banks, continue to gain market share on deposits as well as on credit. And we've seen that the fear on margins coming off because of higher cost of deposits has now largely played out, and margins should start to stabilize going forward as well. So in that context, when you look at valuation vis-a-vis ROE profile and profitability of the sector for the private sector banks, the large private sector banks clearly appear to be well placed. And that's been our view for a while, that if you look at the market where you're struggling to find pockets of relatively comfortable valuations, this is one pocket where valuations are clearly on your side.
Fair point. So, do you think these fears that are there in the market of a farm loan waiver, you just got up in the morning and realized, 39,000 crores being written off, and PSU banks sort of, shuddering a bit. Are those fears overblown?
We'll have to wait and see. Obviously, this is something that will possibly play out over a period of time, if at all. And remember, this is only a few states where we have seen some announcements to that effect. So it's not something that is nationwide, which is impacting the entire portfolio on the agri or the farm loans. So we'll have to really wait and watch and see. Of course, in the last cycle, when there was a farm loan waiver that was announced, it did lead to inch up in terms of NPLs. But I think it's just too early to comment on it, because as of now, the credit cycle seems to be fairly well placed. Credit costs for both private and PSU banks appear to be low, and it does believe that, especially over the last few years, again, both sets of banks have built up significant buffers. Provisioning coverage ratios have gone up quite significantly. And today, net NPLs in the system are possibly the lowest that we have seen, close to almost virtually non-existent. So there is a difference in terms of cycle between the last cycle and now. One is, of course, provisioning coverage is much higher and balance sheets are stronger. Capital ratios are also far better than what they were earlier. So I think it's just too early to comment on this, but clearly the system as a whole is far stronger than what it was over the last 5-6 year period.
Fair point, and this is something that has been well appreciated not only by fund managers, but a vast chunk of retail has made supernormal money in PSU banks over the last 36 months. Let's get down to brass tacks, Shobhani, and start delving into Kotak Equity Contra Fund. This is something that you manage. A total of 67 stocks over 3,100 crores and fabulous 22% CAGR return over the past 5 years. From what I see in the portfolio, this is overweight towards financial services. The data will be playing out in front of you. I am keenly interested in the seventh stock, which is Bharti Airtel, given the spectrum auction that is happening. How do you see Telecom from now on? There has been a dramatic improvement in the balance sheet of Idea Cellular, a very large block deal on Indus Stars, and drumbeats of maybe tariff hikes in the pipeline. How does Telecom look to you? Frothy or still lots of space left for capital appreciation?
So if you look at just, let's focus on the sector. Of course, this is one sector where consolidation has played out, and we've seen clear market share shifts towards the top two players. Now, initially, when the sector goes through this entire, journey of market share grab, there is pricing pressure. But once the market share starts to stabilize, you start seeing price rationality come through, and that's the stage that we are in from a sectoral perspective. Also, with most of the subscribers, moving towards 4G, there has also, without the tariff hike coming through, there has been improvement in terms of ARPUs that we have started seeing in the sector, and that bodes well from an overall profitability perspective. Of course, the tariff hike, if and when it does come through, would be an icing on the cake in terms of overall profitability. What we have seen is that in any sector, wherever there is consolidation, and when pricing stability comes through and players start focusing on profitability and not just market share, the sector benefits and all the players in the sector benefit. And that's where we are in the overall telecom cycle. And therefore, we believe that this sector does appear to be well placed. Even if you have a third player coming back into the space, we believe that the focus on profitability would continue to exist, and hence price rationality should possibly stay through. Because I think we are at a stage where everyone believes that balance sheet repair is essential for long-term longevity and being there in terms of presence in the sector. So I think from that perspective, we do believe that there is positivity, and valuations are still in your favor where the sector is concerned.
Fair point, and that's very well expressed in terms of the possible direction of where telecom stocks will go. For both portfolios, Shibani, I'm noting this very obvious absence of defense counters, except for BEL, which finds mention for a pretty long time. Is this something that you regret not getting into? Stocks like Cochin, stocks like Garden Reach, Masgaon, HAL, they've done fantastic secular growth in terms of stock prices, but are found missing in your portfolio. Any particular reason to stay away?
No, so I think defense as a sector is something that we have been positive on. If you look at in terms of stock selection, of course, focused is a portfolio where it is a 30 stock portfolio and therefore a concentrated strategy, not a well spread out or a diversified portfolio. On the contra fund, we do have a few defense names apart from the one that you mentioned. But overall, if you look at the sector perspective, we believe that the order book in the sector across most of the players, specifically some of the large players, offer headroom for growth and the visibility on growth over the next few years. The entire policy focus in terms of indigenization of defense is likely to continue. And I think the last time, I was on your show, we discussed this. In defense, one point that we miss out is the export opportunity. In many of the names that we have looked at across our portfolios, the export opportunity is something that we believe will keep playing out, and that's a fairly large opportunity. Unfortunately, the world is going through geopolitical conflicts, and that means that the marketplace for Indian companies to increase their exports has just gone up over the last few years. Companies have also invested significantly in terms of building capabilities, which is helping them garner share in the overall export market where defense is concerned. So, a combination of both indigenization of defense and lowering of imports, as well as the export opportunity that exists for players in India, is something that we believe will help in terms of growth come through. Of course, again, here the stocks have moved up quite sharply, and hence one has to be cognizant of valuations to that extent. But we do believe that there are opportunities, and we continue to hold some of them, which are both play on indigenization as well as in terms of export opportunity on the sector.
Okay, if you were to wear your equity research hat for a moment and look at valuations within shipbuilders, as also Hindustan Aeronautics and of course BDL, is it worrisome, or we've seen stretched valuations and irrational markets for years together? Is it that phase?
So, without again taking into specific stocks, which I will not be able to comment on, but again, as I said, we have to look at valuations in a sector in context of the growth trajectory. Now, this is a sector that has come into the growth phase after a fairly long period of time, and therefore, if you look at the runway for growth over the next few years, the runway for growth seems to be fairly strong. Now, within the space, if there are counters where, or stocks where liquidity is low, free float is low, and therefore valuations have moved up quite sharply, those are the segments of the sector that we would avoid. However, where the runway for growth seems to be fairly strong and intact, and therefore looking at valuations in that context of growth and profitability, I think we are in a new paradigm where this entire sector is concerned, and therefore, from an overall longevity of valuations, at least in the medium term, that opportunity set still does exist.
Fair point. Shivani, this question I am sure you answer at least 3 times a day from a wide cross section of your friends and relatives, and also the professional setup. We missed this rally, or we booked out early. Now we are desperate to get back in. What do we do? Invest in lump sum, go for SIPs, buy individual stocks. What do you tell those who've missed out?
So I think my answer to this is that, when you look at wealth creation over the medium to long term, equities have to find a place in your overall asset allocation bucket. And therefore, when you're looking at asset allocation and you're looking at your overall wealth creation strategy, at some point in time, even if you have missed out, you would have to look at equities. What we've also been saying is that when you look at valuations overall, today valuations are at a range where our overall view on markets from an equity perspective in the asset allocation bucket is somewhat neutralish because of what we have been discussing. And therefore, keeping that in mind, create a bucket from your asset allocation perspective. We've always said that look at systematic investment plans, look at investing in a disciplined manner, and therefore SIPs is always a good strategy strategy, whatever time or whatever place it is in terms of the market performance. So I would clearly say to anyone who's looking at investing in equities today, go for the SIP route, look at a long-term investment strategy, be disciplined in terms of your investment allocation on the overall asset allocation bucket, and nothing beats an SIP when you look at equity in terms of investments. We've always said that timing the market is extremely tough. Even for someone like me who spent more than 2 decades in the market, I would not be able to time it to perfection. And therefore, don't try to time the market. Give time to the market, and therefore look at investing at least from a 10-year perspective. And that's where the entire wealth allocation and wealth creation happens from a portfolio perspective. And I truly believe that SIP is the way to go where long-term portfolio allocation to equities is concerned.
Absolutely. Golden words laced with decades of wisdom coming in from Shibani. Please don't be afraid, ladies and gentlemen. If you haven't put in a sip yesterday and you're feeling missing out, today is the best to do it. And do it regularly and do it over months and decades, and take benefit of this fabulous bull market that is unrolling in front of us. In fact, if you're a long-term investor, a color of red in the market is actually good for you, because you get the same thing a little cheaper. Shibani, a couple of final questions to you. When you look at this mad rush for block deals, this incessant flow of promoters wanting to take benefit from record high valuations, as a long-term watcher of the markets, do you think liquidity is going to derail this bull market, or as a fund manager you find relief in getting a nice chunk of stock that you were looking forward to? Which side of the equation do you stand?
So I think that any bull market, you do start seeing increase in terms of deal activity, block deals, IPOs, QIPs. So obviously deal flows start to improve where market breadth is strong and the market momentum is also strong. So if you look at it from some companies where the liquidity in that particular in that company has been low, if you see liquidity improving, float increasing in that particular name, that also adds to look, it is positive from a slightly longer term perspective. But one has to be a little careful in evaluating some of these names, given that there is a plethora of deals, both block deals, IPOs, QIPs, etc. We've been very, very disciplined in our approach to all of this. We've kept our heads down and said that look at companies from a fundamental perspective, look at companies on business, management, and valuations, where the focus should be from our perspective on companies which are clearly gaining market share in the industry that they operate in, companies which are growth companies, but high quality companies with good management, focus on capital allocation, but which are trading at reasonable valuations. So from our perspective, good high growth, high quality companies, but reasonable valuations. These are the areas that we would continue to focus on. And therefore, fundamentals is something that we keep a very, very close eye on, and ensuring that valuations in whatever segments that we are entering into are reasonable as well.
Fine. Shibani, my last question to you. As a long-time watcher of the market, and we are possibly in the best bull curve that we've seen since independence, is there anything that keeps you awake and afraid?
Of course, always. So keeping an eye on risk is something that one has to do as a participant in the equity markets and as a portfolio manager. So there are a couple of risks. One, of course, what's happening on the geopolitical side, and any emergence of fresh tension geopolitically is something that keeps us awake. The second factor is how growth pans out globally. One, we have seen signs of some amount of slowdown where incremental data is coming, especially where the US geography is concerned. Europe has seen very sharp slowdown in terms of growth, and that revival does not seem to be taking place. And therefore, global growth is something that we keep a watch out on. Now, while India has performed well and India macro continues to be stable, remember, we are not an island. We are closely related to what's happening globally. And therefore, global factors are something that we keep a close eye on in terms of risk. The third aspect is what's going to happen in terms of monetary policy and interest rate cycle. Again, a lot depends on global interest rates, specifically what the US Fed does in terms of the interest rate cycle. Here, you would know that at the beginning of the year, there were expectation of 5 to 6 rate cuts, and that has now dwindled down to one. And therefore, the rate cut cycle has been elusive where the US Fed is concerned. And therefore, what happens where monetary policy goes and the trajectory of rates is something that we will also keep a close eye on.
Right. With that lovely discourse on how to look at markets, how to invest money, and what to be afraid and aware of. Shibani, thank you so much. What a lovely 30 minutes. I hope we see you soon again on Business Today Television, and all the best to you for the 5 funds that you manage at Kotak AMC. Thank you for your time.
Thank you so much. It was a lovely discussion and pleasure to be here always. Thank you.
Okay. With that, ladies and gentlemen, the first 2 hours of coverage of live markets pauses for a bit on Business Today. Stay glued for all the top news in the markets during and after trading hours. For the moment, we leave you with Nifty at a record high, 23,970, a century on yet another day, which is the monthly end of F&O account. The Bank Nifty in very fine shape, 200 points higher, fresh record high, 53,072. Thank you so much.
Now, talking about India's growth story, I would like to say that India